Okay, guys, let's get started. Welcome to Frog Radio. Really, this show is about giving you guys not only direct access to some of the biggest and brightest and best minds in DeFi and crypto week after week, but also an opportunity to connect directly with them through a question and answer period. So bring your questions, bring your ideas. We're going to do our best to convey the information in a way that's easy to digest, that you can understand, all under the umbrella of empowering users to access financial freedom, and then to ideally use that freedom to really change the world in a meaningful way. And after our first interview a couple weeks back with Danny, it got me thinking that there's millions of people in the world right now that would love to get out of their shell, get out of that 9-to-5 grind, lift their head above water, and actually make a positive difference. But everyone's beaten down by debt, by shitty interest rates, by shitty borrowing rates, lack of access to the financial tools that help the wealthy elite get to where they are. And so with DeFi, with everything we're building here, we hope to build, the next paradigm that can really unlock that for billions of people, not just 1%. So without further ado, I'd like to introduce Danny. I've got my co-host here, Messiah, who you all know, and we're going to kick it off today.
So guys, of course, most of you guys probably already know Danny. Absolutely incredible rise to glory through his protocols. We've got Wonderland, we have Abracadabra, and we also have Popsicle. I'm sure we're going to get into some really interesting alpha on each of those. But before we, start with Danny, I just wanted to very briefly talk about Avalanche. Our sponsors, Avalanche, we're very, very fortunate to have them. And you know what? Myself and Random Task are also power users of Avalanche. It's super fucking fast. It's super fucking cheap. It just works. And if you haven't tried the bridge out, I posted instructions on my Twitter a few days ago. They actually give you gas when you bridge over. So you can bridge over, get right to it. Now, the most exciting thing, in recent development for Avalanche, they've actually announced a $220 million development fund that they're calling Blizzard. Now, I'm sure most of you have already heard of Avalanche Rush, right? Absolutely massive development fund. I think when it was announced, it was worth 180, 200 million, something like that. So, pretty big, right? But few people understand, when the price of Avalanche reaches a certain point, this is going to be $1 billion fund. Now, we have Blizzard, and Blizzard is an accessory to this. It's something that's totally new in addition to this, and I'm really excited about it because Blizzard it seems kind of like a blitzkrieg campaign, to where they're coming together and they're directly funding this development in the Avalanche ecosystem. So Blizzard, at least from what I'm seeing and what I'm reading, sounds more of like an incubator of sorts, where Rush seems more user focused. But I'm really excited to see what comes of that, and it is good to see Avalabs kind of build out that DeFi infrastructure, because it's so critical. You can have the most badass chain in the world, right? But if you don't have any protocols, you don't have anything unique, you don't have anything cool going on, it doesn't really matter. But these guys seem to know that. I'm really, really excited to see what comes from this. But with that being said, without further ado, we welcome Daniele Sesta to the stage. Bro, you are an absolute legend, king of the frogs, king of the memes, loved by most, hated by few. Certainly an interesting guy that is pushing the boundaries of DeFi. Thanks for being here, bro.
Finally, we made it, sir. I'm sorry for taking so long time to get here. Last time I had a little bit of a problem, so nothing serious, nothing very big, but I couldn't really come on here.
It actually worked out fantastically. So, once again, thanks for your time. RT and I spoke with you not too long ago, for a different show. This is a totally new vibe. I don't know if you were here or not, for the beginning, but the format is pretty much going to go down like this. Of course, this is probably going to be one of our easiest episodes, just because we've been friends. We've used your protocols. We love the protocols that you guys are you and your team are producing and are putting out there. So we're going to start this off, just 20 minutes or so, a bit of back and forth questions. This is your opportunity to talk about the latest developments with all of the protocols, under the Frog Nation umbrella. And also, I wanted to reference something really interesting you said in a tweet earlier. Was you're pretty much going to be like dropping the alpha and showing, weaving this big picture perspective on how all of these protocols kind of, interlace with each other. So I'm just kind of give the floor to you, and, it's no real structure. We can just kind of talk about all this shit and, see where it goes.
Well, let's see if this room here can give a little bit of emoji love down here, because I don't see people raising their fist for the Frog Nation, because we are fucking making it, all of us. So please, come on, guys. I mean, what the fuck? What is this sad energy?
Let's get that emoji love for. It is a bit sad, and we do have quite a few people in here today. Right now, it looks like, oh my God, we have 2,600 people in here. That's insane.
Yeah.
So much.
Yeah, exactly. We want some energy. Nobody can talk. But I want to see those raising fists for the Frog Nation, sirs, because this is fucking Frog Radio, right? So the frogs need to raise.
I just like, how do you? What's the native call of the frog? An ape is easy. Like anybody can make monkey noises, right? But how does a frog, express himself? Is it like a ribbit? Like how?
I guess the frog just jumps higher and higher, sir.
Okay,
that's what it does.
So everybody at home, you heard the man. The cult leader has spoken. If you're not jumping up and down right now, you're not part of the Frog Nation. You're not a part of the movement.
Exactly. We all love raving and jumping, right? So that's about it.
So let's briefly talk about. I guess we can start this out with Abra.
Yeah.
This is actually how I was introduced to you. I'm a big user of Abra. For those of you that don't know, I actually was able to self-finance my own home through Abracadabra, which is really cool. And just because the show is, about the protocols, how to use the protocols, the things you can do with these protocols. Just very briefly, Abra actually allows you to take out a loan against interest-bearing assets. So in my case, that was with 3Curve. It's an LP position on Curve.fi. That's Curve Finance. And this LP position consists of DAI, gross, I know, but it is what it is, wrap USDC, USDC, and USDT. Now, what you can actually do then, and the interesting thing, and this is just one use case of many, for this protocol, is if you have the cash to pay for your home or a car or anything you're trying to do, and you have a little bit more than you need, why not use something like abracadabra.money and leave all of that earning potential in DeFi, right? Take out an over-collateralized loan. So, that just means that the amount of the collateral that's provided for the loan is worth more than the amount of the loan taken. And then you can purchase whatever you're trying to get, whether you're being nuts and getting a Lambo or whatever. I mean, can you imagine buying a Lambo straight cash and then being paid to own it because you've left the earning potential in DeFi?
That would cover the insurance, I imagine.
Yeah,
the gas.
I mean, this is new paradigm type stuff, guys. This is stuff that you could never have done before. And you know what? This scales no matter how big or small you're trying to go. You can buy you a Lambo. You can buy you a Honda Civic. You can buy a house. It doesn't really matter. Shit, you can buy a TV. If you want to self-finance that new 8K LG OLED, for $20,000. It's certainly enough money to finance. But Danny, what's the latest with Abra, man? What's going on there? I saw something interesting today, and this is actually relevant to Avalanche. You were saying that users are going to be able to purchase the AVAX token somehow through Abra. Can you walk us through that?
Yeah, so I will connect a little bit to first what is Abracadabra and how the idea kind of came out. So, of course, I wanted to build a decentralized stablecoin for everyone and everywhere. But at the same time, I wanted to take different collaterals and things that, in my opinion, could bring good revenue to the spell token holders, and at the same time make something innovative and useful for users. So I will explain Abracadabra how I explained it to the CEO of a Swiss bank when he asked me about it. And it's very simple. Today you can have, for example, a treasury, US treasury bonds sitting into your bank account, and they yield something like a 2% or whatever, depending on duration of those treasuries. So what you can do is, theoretically, you can, in the bank directly, you can ask for a loan against those bonds, right? And they're going to give you an interest rate that is called, it's a LIBOR and the Lombard, right? And this is in the case of Eurozone, for example. And you can borrow money against your treasury that in the same time are yielding. And sometimes you can do very specific leveraged position on them. And this is kind of normal in traditional finance. A lot of people do it, no? But we don't do it in DeFi. So that's why we brought this concept into Abracadabra. We wanted to make it as simple as possible to anyone to use very valuable collaterals to be able to borrow money against it. Because my opinion from the beginning is that, for example, Yearn, to me, is more similar to like a bond than it is to a token. Right? So you can imagine as Yearn Volt USDT as a bond that represents lending towards multiple platforms at the same time and aggregates that into one single position. So a little bit like an hedge fund, an ETF, how you want to call it. I think about it as some sort of bond ETF in which there is different type of risks inside, and is risk adjusted by the Yearn team depending on what platform they lend on your USDT and what security measures they look into and what assessment they do on such platforms. So starting from this concept, I would like to open up something that comes up for many people. A lot of people has asked, but how do you, especially a few analysts that have reached out to me for venture capitals and stuff like that for doing their analysis on revenues and profits from Abracadabra, how can you be sustainable with such low interest rates on, for example, Yearn Volt ETH that is basically free? How can you lend out so much money, magic internet money, and still be profitable how you are, and how do you make money, right, on those specific TVL? So this is very interesting. So we have a revenue share agreement, and who is familiar with buy-buy-die.money, the fees that are displayed into the website are exclusively the fees that we take from the initial borrow fee, that is like a one-time fee that you pay to the protocol for borrowing, plus the interest rate that is calculated every second. Then you have to think it in a different way. So how do we make money with something that it's there and costs zero? So it has a borrowing fee of zero. It has only an initial fee, but still make money, right? This is, I think, is something that a lot of people want to understand, because it's one of the reasons why Liquidity, for example, one who would say LUSD is not as profitable as us. So there is a sharing fees agreement with Yearn. So by managing that ETH and by Abracadabra leveraging Yearn Vault ETH, all the TVL that gets deposited on our vaults actually is earning a kickback of 45% of all the Yearn fees back to us because we are bringing the TVL. So this is very interesting because not only we make a slight small amount on the initial borrowing, but also we make money on the TVL. And this is something that a lot of people did not understand. And I think I wanted to clarify. So let's assume that there is $1 billion worth of Yearn Vault ETH into the cauldron, borrowing 100 million magic internet money. So how we make money is that we make money with the 0.5%, for example, initial borrowing fee out of the 100 million that the people has taken out from the cauldron, but also we make 45% of the 1.5 or 2% a year that Yearn does on top of 1 billion, not on just the collateral. This is very interesting, right? I figured I wanted to share this with you guys because this connects also with the next thing, like how do we scale revenue? Because like one of my real focuses here is business development, but also revenue generation. Like I don't think that any protocol can sustain if it doesn't make enough money to do it. Like why would anyone want to invest into a protocol that doesn't have potential to make more money than any other protocol? Like it's fucking stupid. Like it doesn't make any sense. Why would you want to invest in something that has no potential? Yes, maybe it has potential of arriving to 100 billion TVL, but what does that mean if you make only 1 million a year? It's fucking useless, right? So you want something that is sustainable, and the token that earns out of this protocol a good fee sharing, and it can be holded into portfolios of people to basically be able to live off of it, right? Like think about like Apple or any other type of companies in which you have your share. I just think that we are moving away from the share security models, and we are really championing the idea of decentralized autonomous organization making money to their holders, so the participants of these DAOs, and being able to sustain out of these revenues over a very long period of time. I don't know, Dan, if you agree with me, but there is no reason on selling a token that makes you money. If you were able to buy it for a reasonable price and it does a reasonable return, you are simply just holding it. And as the company shows strength and growth and constant business oriented mind, it's the kind of investment you want to do, right?
So that's actually really interesting, that you said that, because that's kind of a new paradigm in DeFi. Before, I guess, really recently, it was kind of just like, hey, I'm going to buy the shitcoin. The shitcoin goes up. I'm going to sell the shitcoin. I'm probably going to get short-term cap gains on it. But, we've kind of entered this new paradigm. What if we could have a focus on revenue generation? What if we could create a sustainable business model around a token, around a protocol? It's really interesting, that you speak about these things, because I don't see many people kind of addressing the business development side, of the protocol. It's mostly just like, developer kind of nerd talk. I think that you address these things better than almost anyone. And, something really interesting I've heard you speak about, I don't know, how far along in this plan you are. And this kind of goes along with what you were saying too. Would like just staking your spell, right? Having this partial ownership in the protocol, and then being paid almost like dividends, protocol revenues, in the form of MIM. For those of you that understand or that don't understand how it works, I'm going to give you a very high-level, brief overview of the current staking model, and that is you have your spell tokens. So you deposit these spell tokens into a container, and in return, as a receipt of your deposit, you are given S spell. Now that S spell represents stake spell. The original pioneers of this were Sushi, I believe, back in the day. But the interesting thing is these protocol revenues are currently used to purchase spell from the market and distribute it to the container. Your S spell or stake spell receipt represents your share of that container. So S spell or stake spell actually appreciates in value relative to the spell token. Your S spell becomes worth more spell token. Now, what I've been hearing you discuss, Danny, and I love this, I'm a total incoomer now. Like I've been trying to kind of reevaluate DeFi, reevaluate really my crypto thesis as a whole, because, up until very recently, it's just been buy shitcoin low, sell shitcoin high, right? That's how you make it. But what if, we are the early investors and pioneers and I have no doubt in my mind that DeFi is here to stay, that we're going to clear whatever regulatory hurdles present themselves, that we are going to see sustainability here. And I think that the early investors in this space, the people that take ownership of these protocols, that participate in DAOs, huge upcoming narrative, in my opinion, I think these people are going to perform exceptionally well. And why not have a longer term mindset, pursue those longer term capital gains, just borrow against your assets, while they generate income, while they provide for your lifestyle. Why not just be a holder? What if now I stake my spell token and I get paid MIM, I get paid dollars? Can you elaborate a bit on that? What you're thinking? I mean, would it be kind of a split between the current model and a new model? And also, what other doors for Abracadabra, would this actually open? I've heard you talk about loans that repay themselves, very similar to Alchemix, are really another really good protocol. But if you could elaborate on that for a second, I think that'd be super informative.
Yeah. So first of all, my belief is that by distributing direct to spell, we are losing a little bit of the power of auto compounding of the S-spell contract, that by buying and staking and compounding, it does generate more value to the people that actually want to accumulate spell token or accumulate a larger share of their voting power, or for many, many other reasons, right? So very recent, in the last week, I have been looking into updating the token economics quite a lot of Abracadabra, because I think that we have reached, you have seen that we have burned like pretty much 20% of the supply that was destined to be used as a tool for liquidity mining just yesterday, that accounts at more than $270 million. The reason why we decided to do that is that I wanted that people understand that fully diluted value is total crap, is a meme, and things change. Like things update with the consensus of the community. Like we are here trying to build the most perfect possible token economics and tools for allowing people to grow their financial potential, right? So the reason why SPEL it's very good is because it auto compounds. So one of the things that I've been looking at is how do I make it so that who wants to receive the magic internet money rather than the spell on top can just add the SPEL to a specific contract or something like that and just receive the magic internet money. So we don't eliminate the buying pressure that the protocol has on top of the rest of the buying pressure that has been very nice. I think everybody loves the Merlin candle, right? But at the same time, allow investors like you or other type of investors, whoever wants a fixed income out of their stake spell, then to automate that collection for them, right? And make it very gas efficient. So this is what I've been looking at, right?
So what you're saying is this is pretty much going to come down to user preference at the end of the day. If your end game, if your objective is to accumulate more spell, then you still have the ability to receive those spell distributions to your S spell position. But, if maybe you wanted to receive a percentage, of what you're entitled to in just straight dollars, to provide yourself with a salary, you will be able to do that as well.
Yes.
Right.
Yes. And you can even programmatically distribute your staking in those two goals, right? You don't have to be just one or the other. You can decide that 80% of your portfolio, because it's quite large, you're a quite large holder, is actually accumulating spell, right? And because you're bullish for some reason or whatever, and other 20% instead is selling the spell that are given to you automatically and collect magic internet money for providing you with expenses or whatever that you need. And it can be even on an interface user experience level, you could even look into your targets of what the protocol is earning based on how much staking there is, et cetera, on average pricing. You could have even a slider. That's my envisioning, right? Have a slider and saying, yeah, I would like to get paid out of my old spell that I have staked, I don't know, $5,000 a week, because that's what I want, or $1,000 a week because that's what I spend. And so you can dynamically change that allocation, and at the same time you don't lose the power of auto compounding, right? And we don't lose the power of buying pressure of the protocol being in the market, taking care as almost the exit liquidity for the ones that do not want to stay for a longer term, right? What do you think?
Yeah, I think that's absolutely incredible, and we really are kind of witnessing a new paradigm in DeFi. We've heard this DeFi 2.0 meme. The real question is, how do we make DeFi something that empowers the frog? That's us, right? We're the frogs. How do we turn DeFi into something that becomes empowering for the frogs, that enables financial freedom? Just receiving more spell is admirable, right? Maybe I just want to accumulate more, but what if I was able to toggle that and say, I need $1,000 a month for my expenses or something like that, and I'd be able to do so. So it really is interesting to see you kind of addressing these issues from a business development perspective. I think it's a fresh take on DeFi. It's something we really haven't seen much before. But before we spend this entire episode just talking about Abracadabra, because we certainly could. I did want to pick here to another product that you have. A lot of hype behind it, and I don't think really that people understand the implications of cross-chain liquidity management. Let's talk about Popsicle.
Ice, baby.
Ice.
This is the moment I've been waiting for all week. Let's go. What do we got?
So I think that I would like to talk, as we were talking also about Abracadabra, and then I would then connect all of this with Wonderland, because there is a lot of people that want to know what's going on with Wonderland, etc. But I'd like to talk a little bit about how Popsicle works. What is Popsicle Finance? I'm sure that a lot of people here maybe saw that it's rising and we are very close to launching, and when sorbetto. Yeah, I have been saying an Italian week, so we are going to address all of that. But more importantly, I would like that people understand what we are building at Popsicle and why it's so interesting, and why it has such an evaluation, which I consider still very early. So Popsicle Finance is the Alameda of DeFi, pretty much. Like, Alameda is a market maker. So you could say that Popsicle Finance is the citadel, like the citadel of DeFi. It redistributes liquidity cross-chain where opportunity arises. So if you have, if you're an LP, or even if you're not an LP, you want to capture fixed income or yield on top of your portfolio, and you have a position that is, for example, partially in cash, and you have a position that is Ether, and you could very well LP Ether USDT, for example, or Ether Magic Internet Money, and so on, and capture some of the fees of the trading that is happening without losing much of directionality. And by that, we have been working a lot with the Blockchain Research Lab from Hamburg, and we have demonstrated that actually holding versus LPing outperforms holding, and has historically outperformed holding by quite a lot, with the fees on Uniswap.
Let me stop you right there really quick, though, because, what you just said, like, especially to a lot of us that are used to the standard constant sum market maker, 50-50 pool, like, that's crazy talk, right? We've all been conditioned that, impermanent loss bad. Why would you LP when I can just, expose myself to an asset, have that single-sided directional risk? So what you're telling me right now is that you actually have research and confirmation saying that LPing, when done, adequately, when done correctly, is much more profitable than just holding.
Yes, it's correct. Yes, it's much more profitable than just holding. And
so witnessed kind of a paradigm shift in how people think about this.
Yeah, I think there has been a lot of misinformation about what LPing is, and because like a lot of actors, especially like venture capitals and investment funds and all of these guys, they have no interest on make how to make money, to be honest. Like they just want to capture that for them, like capture the premium, right? They don't want that the small fish goes in and competes in thousands and thousands and then fuck their farms up, right? So, but in reality, for example, using an EMA 20 strategy, we have demonstrated that just hopping by different type of ETH stable pools from ETH stable USDC, ETH stable USDT, and ETH stable DAI on Uniswap V2, we can outperform any of those pools, and we can really outperform holding the same asset on a longer term period of time. Of course, like everyone needs to have sort of like in mind what's their investment time frame, right? So we are looking at this into like a 4 to 6 months at least period, right? So if you're looking into holding certain asset, and this is a very good way to do it, and Popsicle Finance wants to automate that and make it very simple through the usage of strategies like the EMA 20 that allows you to capture always the maximum possible yield out of your LP, liquidity provision token. So now that is extended because farming has been also very popular. So farming right now is a multi-chain thing, right? You can see the rotator going all around trying to farm everything, and it's something that many people cannot really do by themselves, right? Like we're not all DeFi experts. So Popsicle Finance, what it wants to do is to capture that farm. So not only is looking into the strategy of EME 20 into Ethereum LPing, and is trying to see if that strategy would outperform farming on Avalanche, for example, on Trader Joe, or farming on SpiritSwap, ETH meme on SpiritSwap or Avalanche or whatever, Arbitrum, for example. So it wants to capture the maximum potential out of your LP to make sure that not only you have the lowest impermanent loss, but also you have the best outcome through directionality, because the choice that you have when you do an ETH stablecoin type of pair is that you're kind of directional, right? You are directional ETH, so you want to capture as much as possible of that directionality, and at the same time, you want to earn yield and maximize the potential of your portfolio in a safer way. Because at the end of the day, There is a lot of products that use options, etc., but are not as safe as LPing, right? Especially on a 50-50 type V2 pool. Now, why the type V2 pool is important is because it's a standard. So you can find it on Trader Joe, on Spirit Swap, on Spooky Swap, on Sushi, on almost any chain. And all these chains are now giving all these incentives. That is a very big opportunity for consumer to capture some of that yield, extra yield, and open up these new markets and liquidity on these new markets. So Popsicle Finance allows you to enter into this product is called Sorbetto Limone, to enter into this type of position, and it redistributes across all these chains the LP to make sure that you capture the maximum. You average down basically all the LP, and you capture the maximum yield across any chain and any opportunity that arises. Now, a part of that, the first product that we have built completely is Sorbetto Fragola, because if you think about LPing ETH stable, you need to also consider Uniswap V3 as a potential source of income. So UniV3 has been performing really, really well, and part of the Sorbetto Limone is also being able to capture those fees on UniV3. So it uses Fragola as a component to basically spread the liquidity across all these exchanges, and allows to manage this position efficiently. Now, how does Uniswap V3 Fragola work? It's fairly simple. Like, we have tried and looked at a lot of strategies, etc. We have done a lot of research, but the reality is that, let's go back to your question and this information about impermanent loss, right? Like, what is impermanent loss? Impermanent loss is a very simple thing. And we need to understand a little bit what the market maker does to understand what impermanent loss is and why it exists, and what we want to do to make sure that the impermanent loss is as low as possible. So Citadel, everyone had heard about Citadel and Robinhood and all that stuff. So Citadel buys flow, buying flow, selling flow, whatever kind of flow. That's their business model. Why? Because if they know in anticipation what are the orders that are coming in, they as market maker basically arbitrage those orders and make a fee on top, right? It's as simple as that. They are the book, they are the liquidity, so they make sure that they capture value by quoting in a certain moment certain prices that are slightly higher or slightly off, so they can really capture and take the profit home, right? So that's when this happens. So when everybody's like, oh, Shiba Inu is on Robinhood, that will happen sooner or later. The market maker is right there, happy as fuck, trying to wreck everyone, basically. But that's their job, and we are happy that they're there, right? They need to be profitable too. If not, nobody's going to provide the liquidity for these buying orders. And in that case, all these consumers buying this Shiba Inu and clicking hardcore on their app are actually sold to Citadel as good flow, right? So this is the concept of a good flow. A good flow is a profitable flow, is a predictable flow that the market maker looks into and is just slurping like crazy. Now, the bet flow, on the other hand, is what is fucked. And the bet flow is when the price is misquoted. So you are a market maker in this moment and you're quoting the price of SHIB wrong, because on another market, there is way more action than in the market where you're at, and you are just selling Shiba at the lower price. So you're fucked. That is bet flow. And you're hit by arbitragers trying to profit out of your bad quote. Now, by design, the AMM is a little bit tricky, because if there is no trading going on and there is no good flow, especially, then what happens is that what is quoted is wrong. So the price of Bitcoin in that moment, WBTC ETH, for example, in the moment X, it's misaligned from what on the centralized exchanges that are getting hit by the good flow is. So in that moment, you as an LPer, you're wrecked because you're going to get hit by arbitragers. So arbitragers are going to say, oh yeah, nice. So these guys are giving me cheaper Bitcoins because it's an automated market maker. It doesn't move the price, right? Like it's just there. And what happens is that they buy that Bitcoin and they resell it where the good flow is. And this happens all the time. So the impermanent loss is nothing more than the difference in pricing from the best liquid and most efficient and with the most good flow market out there and you and the market in where you're trading. Now, this inefficiency grows as volatility grows. So when volatility is very high, it's very difficult to quote the correct pricing all the time. And market makers like Alameda, which I like a lot in the sense of specifically technical sense, right? As a market maker, they do a great job on trying to predict these good and bad flows out of centralized exchanges and decentralized exchanges to try to move opportunities around and capture value. So as the volatility picks up, then the price changes so much over each individual block that as the market maker or the automated market maker, which is us as LPers on the chain Ethereum, we are very slow. So it's really comes down to the fact that as we are much slower than what is happening on the centralized exchanges, we're getting wrecked. Higher the vola, higher the impermanent loss, higher the bad flow that hits our AMM, and this is what happens a lot. Now, what is the interesting part of the design of Uniswap v3 is that you can imagine it more like an order book. An order book, if you visualize it as, you might have seen it, like for example on Bitfinex, you can imagine it like a little castle, like a little sandcastle with all this, like a Lego pyramid Lego. So every piece of that pyramid Lego, you can imagine it as a tick. That's how they call it. A tick is a 0.001% price difference. How Uniswap does is that it says you set up a range in which you're going to distribute your liquidity on. So that range is expressed in these little Lego pieces that compose this pyramid. And you can decide how far you want to go on one side. You want a bigger side on one side and a steeper part of the pyramid on the other side. And you can set it up just like any centralized exchanges order book, because the only difference that you could do it, but not with just one position. But the idea is that you are going to distribute equally on every tick the amount of liquidity that you added. So if you added like Ethereum and USDT, what happens is that you decide the range. The range is expressed in ticks. A lot of ticks is a certain price. So the lower the ticks that you put, so you are more concentrated. So you are at the pinnacle of that pyramid. And the more ticks you put, then you're going down and down and down in that pyramid. So the likelihood that you're getting quoted a correct pricing, it depends on the thickness of that pinnacle, the lower part, the higher part of the pyramid. So the more concentrated the liquidity, the more potential you have to be hit by the good flow because you're quoting correctly. And the lower is the fee of trading on such order book, the more flow will come organically to capture the best trading experience. So to have the right pricing of the asset. So Popsicle Finance, in that sense, takes this all concepts that I told you and starts with a very simple idea. Like, so if impermanent loss, as I explained, is nothing more than a volatility problem and the fee problem, then what is the best way in which we reduce the which is the best way in which we reduce the impermanent loss, and at the same time we capture the maximum amount of fees and the maximum amount of good flow? Well, is by ranging into the average. Now, then I don't want to get too technical, but stochastic volatility. So we take a metric and we say last week volatility or last 14 days volatility has been a certain amount. So that's the range in which we want to pick. And that potentially is going to be the best range in which we can be out of any range, because we will rearrange the minimum possible, because every time we rearrange, we spend money to replace the liquidity or our little Lego pyramid. And we stay within that range, quoting the best possible pricing as much as possible, as much as we can. So, yeah.
What you've described there is above my head. I'm going to go out there and say it. You've described it so eloquently, and you did get a little technical there. But my takeaway here is, okay, now, but I can have access to that strategy by depositing my LP onto Popsicle. And I think that's that sort of leveling the playing field that excites me as a user, as admittedly a newer DeFi user, maybe just 4 or 5 months now, is that when I read the V3 docs for Uniswap, I thought, okay, this is really cool for LPs. It's very technical. There's a whole world of opportunity to come up with strategies here. And what you've described now is that you've established that strategy and you're now basically automating it for, mom and pop. The Frog Nation can just kind of come in and play around with it without having to do a whole lot.
Yeah, that's correct. I just wanted to a little bit demystify the idea of impermanent loss and try to make people who wants to really dig into what I said and have a little bit of material on doing further research, right? And make their informed decision on what is Uniswap, what is market making. I mean, you need to start, as I said, by understanding what is the job of the market maker. And the job of the market maker is not just is making money, like realistically. But the worst thing that can happen to the market maker is the bet flow is fucked up. So you need to try to replicate the centralized exchange style of market making into the decentralized world. This is why we're building DeFi, guys. Like, we're not reinventing the wheel of fucking nothing. We are just recreating what is out there and making it in a way in which is trustless, which anyone can access, and any actor in one click can capture that value. That is how I think about it. Like, that's how I see it. It's just decentralized finance. Just even the name by itself, it's finance anyway. It's not special. Everything already has been invented pretty much. It's just that we need to be as smart as possible to replicate such concept and strategies and ideas into a trustless environment, and that's what I focused on. I want to build instruments that allow any frog to just one click, single-sided ape like an idiot. Like, you just have ETH, but you want to make it, and you don't need to just think how much USDT do I need to enter the freaking LP, dude. Like, that's terrible. Like, I literally know people that are very good in DeFi. They can't fucking LP on V3. Come on. Like, let's be realistic. It's impossible. Like, it's literally like asking, I don't know, my 4.5 years old son to drive a car. Like, it's not gonna make it, right?
Yeah, I think I've been living in bad flow town in my limited experience with LPing, and I think a lot of it is you're compelled to take an LP position at the wrong times, as if the same way people like to sell bottoms and buy tops. I get excited about LP positions usually when the market's pretty warm, and then I look at impermanent loss 2 days later, and I chicken out and I sell it. And that's been my early experience on sort of small sample sizes, just playing around with it. But you've described the world of market making so eloquently here today, and I'm sitting over here taking notes, picking up some ideas, and I hope everyone listening in is getting that same experience today and preparing questions. In the latter portion of this episode, we're going to have opportunities for you guys to step up and ask clarifying questions or share your ideas. Earlier you mentioned, wanting to speak a bit about Wonderland. With regards to Ice V2, I know there's a lot of anticipation coming up in the near
Yeah,
future. I've got to ask the obligatory question: when V2? Is that something
yeah,
that the Italian week? How are we doing there?
yeah. So I want to first to start by the fact that everybody needs to know that I have PTSD hacking situation. We have been like
The
I played
PSD goal or
PTSD. Like I really, after the hack that we experienced this summer, like I've been really, really careful on anything security wise, right? Like more than careful. Like I pretty much have a castity belt and a lot of beautiful women in front of me, and I can do anything. Like that's pretty much how I feel about it, you know? Like so what's going on here is that we have been very focused on I'm part of that. I want to thank and everyone that is here that has been holding ice for a while and has passed through the hack and has been diamond handing and is through Vikings, and finally we get to the point in which we can go back generating the value that we were expected to. I'm also like very happy and emotional about the fact that thanks to you guys, I have been able to repay myself, all the victims of the hack, with also an extra that today is even more. So it's really really beautiful to know that the community has been able to not only get back the money, but also start building together and being hanging around. And like it's not always about the money. Like of course it's about the money. Everybody comes around about the money. I'm the first to say that you need to build valuable protocols that generate money, right? But at the same time, I feel like I wake up in the morning, and I'm happy. I'm happy because there is so many people that support us, and I always lurking into Discord, even though I'm not always writing, because then I need to answer a million zillion questions, But I'm always looking into what you're saying, guys, and I'm like a bird on top flying and seeing all your comments and taking notes on what you would like, what is your expectations, and try to out deliver your expectation by working as hard as I can, right? And trying to coordinate the team to make things that truly outstanding, like that when you see them you expected something and then you're like you have your moment. Like that's something that drives me, like it's a real driver for me. And Popsicle V2 is the fucking driver. You know why? Because we got hacked, we got wrecked. I didn't sleep for days. I almost cried. I have still PTSD on that stuff. We built it from the scratch again. We fight. We did all the security forever, like a zillion million times. We looked at it so many times. We made it even better. We remade the interface. We took all the ideas that we had from the beginning and we just put it in there. And I tell you, like, if this shit is not gonna blow your mind, I don't know what can. Because Popsicle V2 is the fucking best tool ever made for LP. It's just insane. It's really insane.
when
Like,
when when
go
V
ahead.
when V2.
I would say so. My team hates me because I see I see that they have co-founders teams here, and I have messages like Daniele, because whatever I will say is kind of a deadline. So the last revision has been done yesterday by Sertora. We have found like a few days ago a little thing that didn't really work out. Like not all, like more than a critical, um, like potential exploit thing is that I would like to explain to you guys how actually this will audit stuff works. And I think it's worth mentioning what Certora does. Formal verification is a very, very specific way of verifying smart contracts or in general software. This type of formal verification is based on math. So what Certora does is that they write a very specific test to check if the math inside of a smart contract makes sense or not. It's not a logical thing. Like, it's not about how the code is written or how the whole logic of the contract is in terms of product. It's more like a very, very hardcore kind of mathematical situation going on. And it's very beautiful, because when then they come and they say, oh, listen, in line, I don't know, 38, there is something, because the math doesn't really add up. And like they cannot say like, oh, I think you should fix it this way. They say there is a problem there. So when then you look at it 1, 2, 3, 4 times again, and you're like, wow, how is it possible? Then you have this moment, like, oh shit, like I didn't see that, or even the auditor didn't see it, right? So the auditor looks into the general logic of the contract, looks into how it's written, and if it makes sense into a product level. But Certora just tries to break it on a mathematical level, because if it's broken on a mathematical level, then there must be a problem there, because as you know, 0 plus 0 is always 0. So there is no question about that. Now, a few days, we were gonna launch, right? And we did the last review like a few days ago. And what happened is that they said, there is something that still, it doesn't really add up, which is which was a minor thing, but then I don't want to release this product, even though like all the auditors, all the guys, everybody say no, it's fine, fuck you. Like I don't want to get hacked the second time. Like I don't take the chances, guys. Like
Why rush it?
Yeah, but that
Come this
doesn't
far.
mean that like we're gonna launch in the next few days, so it's not even weeks. It's not even a week. But the point is another. Like I don't want to be peer pressured into launching anything. I want that everybody makes it. So if I fuck it up, we don't make it. And I want to put my money into it.
I appreciate that as a holder, and as a non-dev, I just hear you say I need a little more time, and I'm like, cool, I'll see you in a few days. Like, there's really no rush. I think, especially coming from where you've come from, you've got to come at it with that mentality.
Yeah, it's a little bit unfortunate, because like I'm kind of like a sheeper type of guy, as is going on. But the sheeper needs sometimes to just chill the fuck out, because this is really kind of like, it's really complex stuff. Like it's not something that it just comes out of nowhere. If it was easy, Uniswap would have built in this function, right? Like it would be already as a part of the core Uniswap code.
I tried to imagine all the moving parts after you described really how Popsicle V2 is going to work on our last show, and it kind of made my head spin. I mean, just having automated cross-chain liquidity optimizing strategies is like, okay, there's got to be hundreds of little bits. So I don't think anybody here can complain with any kind of delays, and you getting it right is the most important.
But I can talk about something cool though, like that we're working on, that is like an alpha thing. While you are all, because Ice Age is coming, like no joke. Like I wouldn't go around saying the Ice Age is coming if I don't know that it's coming. Like it's coming. I've been always making everything that I say, so I try always to deliver more than what is expected. So what is interesting about Popsicle V2, in my opinion, is the way that everything is presented. Like Popsicle V1, I think was a kind of like a knowledgeable type of guy, kind of like product in which you deposit into these vaults and kind of stuff. And it was still complicated, in my opinion. The new Popsicle V2, on the other hand, presents the opportunities into a complete different way. Like I really like interfaces that are built with the concepts that you find into more fintech style startups, right? Like Revolut or these very successful, highly successful Robinhood, highly successful companies. And I don't understand why in DeFi especially UI UX sucks. Like let's be real. They're fucking shit, garbage. So we really worked a lot on also on the smart contract level on all this zapping and making it really easy to join these positions and presenting it on the UI very easily. So we added like featured type of vaults. So we make navigation much easier because there is so many now strategies that we have added, so many pairs. We have added like popular ones based on activity, and we are implementing all these concepts of utilizing the data that we have from our user interacting into the page for proposing, for example, in connecting your wallet. And when you connect your wallet, we can know what assets are into your wallet, and we can present opportunities based on the assets that you have, right? So how I see the future next 2 months of development of Popsicle Finance into going to make it almost like a portfolio manager. So when you present your portfolio to Popsicle, Popsicle tries to optimize your portfolio, as we said before, like LPing outperforms directionality. So it presents the opportunities on where you could outperform your directionality and makes it super easy to join these opportunities through the UI.
So I wanted to take this opportunity to pivot to Wonderland. For those of you that don't know, Wonderland is an Olympus DAO fork. Not even arguably, it is the most successful Olympus DAO fork with a treasury balance as of this moment around $280 million, a $1.4 billion market cap, just over $1,000 backing for each time token. What are the plans for Wonderland, moving forward? Is this going to be differentiated from Olympus DAO? What's going on there? Because I know there's been a lot of buzz around a potential RPG coming up. There's a really cool rebrand that's just taken place. If you guys visit the landing page for Wonderland, and I believe one of our community members has actually done that. But maybe 5 minutes, take a little bit of time to speak about Wonderland, and then we're going to open to Q&A from the audience.
Yeah, so Wonderland. So from the beginning, I said that it was an experiment. So my personal opinion when we launched Wonderland was to not compete with Olympus DAO, because I don't want to build the next reserve currency of the world. I don't believe I'm pretty much a Bitcoin maximalist, guys, like just so you know. I have Bitcoin tattooed on my middle finger. Like I really like Olympus. I think it's super interesting what they do, even though I get hammered by them on a daily basis, but fuck it. I don't give a shit about haters can hate.
Haters will hate and builders will build. It is what it is.
Exactly. But I find into the Olympus DAO token economics model, the new EOS ICO model. Like I really liked the EOS. Like I think the ICO that they did was really great and allowed them to really raise a lot of funds and have a lot of engagement and gamification all over. Like people was all into it. And I think in a way Olympus DAO is very similar. Like people like the rebates, people like the bonding that is nothing more than just OTC of treasury, like glorified, and all these concepts together make of an outstanding tool for building decentralized autonomous organizations treasuries. So how I see it personally is that the APY and all this stuff can be changed, but I don't see it very sustainable on a very longer term, because I don't want to be like the Litecoin of the Bitcoin. Fuck that shit. Like, I don't want to be Litecoin. Like, I didn't came into DeFi for making forks, but I came to DeFi to innovate the way that people can utilize certain assets and certain code to empower them, to empower the Frog Nation. So how I see it is that right now we have been able to create one of the largest treasuries around, as you mentioned, $280 million. And we have time that needs to be distributed to the ones that basically prepaid it for the runway. And we have the opportunity to decide what to do with this money altogether. So if we start with the concept that this has been an ICO basically for a DAO, then what kind of doors open, right? It's super interesting in my opinion. And connecting with the concept that we started with on how to generate value to token holders, how much value can we generate with the treasury that we have right now into our hands to our DAO holders, DAO token holders, right? How much more powerful becomes a protocol that has basically a massive community ready with money and all frogs, and this really becomes something, in my opinion, outstanding. And that's why we are building powerful but basically deploys a Wonderland for anyone. Like from the beginning, it creates the token, it creates the DAO setup, it creates all the checklist for safety, so people can assess the safety of how many multi-signer exist, if the keys has been managed properly, if they deployed certain asset like POM or not, etc., etc. And anyone can, in a few clicks, create their own DAO and have a super sophisticated, cool, fun, engaging system to raise funds for such DAO and empower the Frog Nation to become the VC of itself. So spin out all these decentralized autonomous organizations that are team-centric, that are people-centric, and that are able to invest into innovation inside directly of the chains in which they are deployed, because this thing is going to go to any chains that we support. So you want to, are you a person that is so much into Avalanche, then just like us, you will be able to deploy your Dani DAO or whatever you want with a specific team on investing, for example, in DeFi, in protocols on DeFi, and building protocols of DeFi very specific, and you will be able to raise money out of this powerful that is going to be your system. You're going to issue the token, everything. It's not even a launchpad. I would say that it's way more than a launchpad. It's the power tool for community to be built and for people to raise funds all together and really do some change. Whatever
so
your goal,
like a DAO in a box, in a sense.
yeah.
You're going to provide all of the tooling, the counseling, the fundraising methodology, really everything for some, really anybody to come in. Let's say I want to start a charity focused DAO, or something like that. I can come in and I can do that in a few simple steps.
Exactly. What if in the sense of Wonderland specifically, what is the DAO focused on? From the beginning, we said that we want to build a game, we want to build an RPG, we want to support gaming and NFTs in the Avalanche ecosystem and beyond. So that makes us instantly the largest DAO out there investing into these teams with more than $200 million. And how much value that can generate to the time holders is just insane. And there is no more like, oh, when this thing is going to collapse, or is it the Litecoin to the Bitcoin? The rhetoric, is it but shittier, or is it but better? I don't give a shit if I don't want to be the better or the shittiest literally, it's not important. I want to be the coolest fucking DAO in the world that by the end of next year has made so much money because we crowdfund investing. We have the money, we have the community, we have the knowledge, we have the insider, we have everything to make it so fucking successful that you literally don't need anything else than just a group of people, like-minded people, and money altogether is just, we proved it. We keep proving it. Like, we don't need just money. We need people. Like, the value is in the people. It's not in the money. Like, money by itself, unallocated, doesn't do anything. Like, it doesn't work for you. But people do. People are fucking insane and fantastic. And in the power of the Frog Nation lies exactly into giving the people the tools that they need to follow their dreams and build their communities and build on top of all our tools, and just expand and expand and empower and empower and empower, you know?
Yeah, I think a big part of the crypto experience is coming for the opportunity and staying for the community. And then that's something that I've experienced myself where, you know, you show up, you're intrigued, you say, oh, this sounds interesting. It's a promising technology. I'm in it for the tech. Oh, I can make some money. Great. And then you realize that behind the wall of you know, this undoxed kind of cartoon character, everyone hide your keys, you know, everyone's out to get you. But as soon as you start to meet people and really connect with people, you realize the brilliance and the friendliness and the genuine character behind, I'd say 90%, 99% of the actors in the space. It's incredible.
Yeah. Also, let's address also the situation of the APY. Like, by the fact that we have all this time that is undistributed, if we decide on a date in which the bonds will stop, so there is not going to be more time emitted, and the rebases, the APY will then finish of the runway, then we can basically, how I imagine this to work is that people can decide how long the bonding and the rebases is going to last, like a month, 2 months, 3 months, 6 months, or whatever. And at the end of these rebases, the way that they can distribute is by burning the excess of supply. So they are indeed distributing that to the memo stakers.
Potentially looking at a situation, you know, for Wonderland to where, you know, where additional time is not being minted. You know, it becomes this incubator of sorts, community driven, with basically unlimited funding, with a massive community. You know, and I mean, bonds stop for Wonderland, is what you're saying at some point.
Yeah. Yeah. So, exactly.
Okay, so basically, you know, holders, you know, don't get diluted anymore. Maybe are the emissions going to stop? Is it going to be like you know, the rest of the runway is going to be distributed? You know, have you kind of arrived at any ideas around that? What are you thinking there?
Yeah, I think the people should vote in the way that they want to end this. So we can end it in two ways. Either the rest of the runway is distributed, so the 60,000% APY or whatever it is, it's keep going till the runway is over. So there is no more time minted because there is no more bonds, right? So you can only buy and stake, which is very interesting also on a logic level, on a token economics level. Or you can decide to burn the whole runway and call it distributed, because effectively you distributed it to all the staker at that point in time, right?
It's kind of a wash at that point, right? Either you have a lot more tokens that end up being worth less relatively, or you end up with the amount you have, but there's no dilution.
I like more the amount you have and there is no more dilution, because it makes more sense to me than keeping something going for a long time with people getting desperate or whatever. Like, I don't like that. Like, I like the idea of this ends in this date. Like, whoever is holding at this date gets distributed the whole runway, you know?
Well, and you mentioned voting as well, right? So this is something I assume you'll put together in a proposal, and
yeah, definitely.
People can discuss it, and then the voting power will speak for the DAO. I mean, that's really what it's all about.
Yeah, because at the end of the day, then people will want to accumulate more tokens because they want to have power into the treasury, and others will want to sell because they got distributed, what they bought, right? So in my opinion, that is just wash out everyone that is there just for the Ponzinomics and keeps inside everyone that is here for the community and the building and the future of the DAO. So it just gets dynamically redistributed, right?
Yeah, and what you've described here, I mean, we've seen a lot of, I guess, drama around the idea of seed sales and pre-sales and VCs and inaccessibility for the average person who doesn't necessarily have the network to provide value to a project early, coming in at the public sale level, which is usually very small tickets. And through this kind of a DAO structure that is investing in new projects on Avalanche gaming NFTs, you'd really have access to that kind of, if you will, deal flow while sitting within the DAO. And would one time token essentially equal like a share of, the total? Is that the idea?
Yeah, exactly. That's exactly what it is. And I also think that on a narrative level, we are moving towards the last part of the bull run. And I think that it's time for retake the first narratives of Ethereum, right? And the first narrative of decentralization. And I think the time really has come, like the time of taking back what we wanted to do from the beginning in 2015, in 2016 with the DAO, and really put it in the hands of people. Like with Powerful, we can allow anyone to raise massive amounts of money based on teams and ideas, and really create this decentralized autonomous organization that are focused on community. And if you think about the model, like the people that has been staking for all the time, so are the biggest believers, are the ones that at the end up having more shares of the DAO, right? More voting power, which is what you want. And the speculators had for all this time period, all their exit liquidity that they wanted for dump it or do whatever the fuck they wanted all this time, right? So, but at the same time, you capture the speculation in terms of money that goes into the treasury. And you allow really the treasury to grow because of this, because of the two components. You have the investor that from the beginning or from any point in time has entered and is accumulating his valuable share of the DAO, and you have the speculator that has used all the tools that OM provides to speculate and exit his position. So you have these both things, but while doing the speculation, has replenished the treasury of the DAO, and it's actually providing value to it. So even though it's speculating, it's still providing value. And this is the genius, I think, of the Olympus DAO model. I think it's really the future of fundraising for a decentralized autonomous organization.
So, we really do, appreciate your time. And of course, we've spoken a lot longer than we intended to, just because there's so much to cover. I did want to go ahead and do our final pivot here, which is to the Q&A with the audience. I'm going to step into more of a moderation role at this point. We're going to let Random Task drive the discussions here. Here's how this is going to go down. You're going to request to speak, and I'm addressing the audience here, and I will invite you up to speak. Now, this part's really important. Random Task is going to call on you, okay? When he calls on you, please unmute. You can ask Danny whatever you'd like to ask him. I would remind everybody that we have a zero tolerance policy for any kind of negativity or trolling or anything like that. We respect Danny and we respect his time. We want to make sure this is a good experience for everybody and for the rest of the listeners. So everybody, please be respectful. Now, once, we do have to be respectful of everyone's time. Once Danny's answered your question, rather than engaging in some long-winded discussion, it would be excellent if you could just say, thank you so much, at which point I will be removing you from being a speaker. Now, I did also want to disclaim that this is being recorded. So if you do not want your voice recorded and you do not want your voice to be on Spotify and YouTube and iTunes and all of that, please do not request to speak. You requesting to speak is also consenting to being recorded. So please keep that in mind. With that being said, we'll try to keep this 15, 20 minutes. Please keep the questions short and sweet. And I will go ahead and start adding speakers now. Thank you.
Well said, and thank you for getting that disclaimer in here. That had slipped my mind. A really key piece of this. Let's start off. Let's see who's popping up. First speaker, King Julian. I am. Hop in.
Hey, thank you for having me. It's awesome to have this opportunity. Daniel, I just want to ask, because you've been kind of hinting at Terra and UST with MIM and Abracadabra. I just want to know if there's any info on that and if it's going to be local on the Terra ecosystem, or if it's going to have to do with bridging.
Yeah, I will explain how it works. So we deploy the strategy. We're just looking into security. How it works is simple. So you deposit USD into the abracadabra.money cauldron as any other interest-bearing asset you would do, or any other token, and you borrow magic internet money. This is simple, right? But you would tell me, Daniele, but what the fuck? Why would I put a stable to borrow another, right? Like, it doesn't make any sense. So here comes into play the first strategy for DGenBox. DGenBox, when you deposit your USD into Abracadabra, what happens is that the USD is in DGenBox. DGenBox has a strategy to pick up this USD, and through this shuttle bridge and ETH, the ETH Anchor implementation, it sends the USD back to Terra, and they become AUSD, Anchor USD. So they carry the yield-bearing properties of the Anchor USD, right? So they earn the 20%. Now, to allow people to be able to withdraw, because this has a fee, right, and it goes to Terra, and it might take some time, we decided that we have an 85% of the USD that are deposited on DGenBox go to Terra, and 15% stay always available for people to withdraw their position from and unwind their position from the cauldron. This is effectively the first strategy cross-chain ever made in DeFi.
That's awesome, Daniel. Thank you. I don't know if it's going to be available also in any other chains, just because of gas fees. I know they keep a lot of people outside of DeFi. So is Abracadabra going to be able to work with, say, Phantom or Avalanche across to Terra, or not yet?
Not yet, because we don't have the shuttle bridge to Phantom or to Avalanche, for example. But if we will have the shuttle bridge, definitely. Like, one thing that I was looking into is how do we implement this, but with wormhole, USDW, okay? So I'm looking for, like, I'm very bullish on MIM and USD working together, because with this, we can really lock a lot of USD, right? And we can burn a lot of Luna. That's and I really like that kind of dynamic going on. So, and also is printing, like, dude, like leverage 10x, that thing, it's just print, right? So it's not just casual that you're spending so much money to have more liquidity on MIM USD that now finally has liquidity on it. If you take a look at how much has been augmented since we did bribes in there, it's just fantastic. Finally, USD is really available on chain, on Ethereum, right? So yeah.
Brilliant. Thank you, Julian, for the question.
Thank
We've
you.
got an incredible response from the audience here with over 20 requests waiting. I'll get right to it. We've got Dear Dow Weird up next. What's up? You're going to have to unmute yourself, good sir or madam. All right, we're going to skip to the next one. You can join us after. It looks like you just disconnected. Alan, what do you got?
Hey guys, thanks for taking my question. I wanted to dig in further on your comment about Popsicle finance. The research that you talked about coming out that LPing outperforms direct asset exposure hasn't been my experience, but maybe I'm just doing it wrong. In your research, are you taking into account that when LPing 50% of your capital is not asset exposed and sitting, half in some type of stablecoin? I'll give you an example to try to make it more clear. Say you have $100,000 to allocate.
Yes.
Are you saying
Yes.
that
I already
splitting that
respond.
exposure into a 50-50 LP pool outperforms taking the same $100,000 and getting direct asset exposure?
Yes. So you cannot compare 100% of the portfolio being in one single asset versus 50% of that portfolio in the directionality. I'm assuming that same amount of ETH that is in the LP would be in the portfolio. Okay.
Got it. Thank you. I think that makes sense. I think it's close to comparing apples to oranges in that case because you're talking about different asset allocation requirements, but interesting nonetheless.
Well, I mean, it really depends because if you take a look at just the directionality of how much ETH you end up into the period, it does outperform just holding ETH, right? So I suggest I can send, if you DM me, I can send you the full research so you understand a little bit better because it's very specific on the ETH stablecoin pairs. Okay, so
that would be great. Thanks.
You're welcome.
Oh, I might have been on mute there. Reply Guy, you are next in line. What do you got?
Hey, I was listening and I heard you say that you're like a Bitcoin maxi, and I was just wondering where you're storing your Bitcoin. Do you have it on Ethereum or is it on the Bitcoin blockchain?
On Bitcoin. Yes,
Cool,
exclusively on Bitcoin, cold storage.
Thank you.
All right, and we've got Andrew Fisher. Come on down.
Hey, what's up, Danny? It's me, Fisher, from the community. How are you? Yeah, so I was actually just curious. I was seeing a lot of these tweets. I haven't been able to keep up. I've been busy lately. But I saw a tweet the other day about the Anchor protocol, the looping, using Abra. Is that currently available, or how would I use Anchor on Abra at the moment? Is it?
Yeah, so it's how I described it just before. The UST strategy is what they utilize as Anchor. And it will be available in a few days. We are just taking care, testing, because there is this component of the shuttle bridge, and there's a few things that we want to make sure that they work, but actually it's in production, like we are doing, like it's there. Nobody knows the others, but we are actually doing stuff with it. So, yeah.
Cool, man. All right. Awesome. Thank you.
I keep hearing about Anchor Protocol. I really need to wrap my head around Anchor Protocol. I'm going to do some reading this week. Flaky, you're next with the questions.
Hey, thanks. Danny, I was curious, what are your plans with integrating with the Solana ecosystem?
Mm-hmm. So first of all, if you will be next week in the Solana events in Lisbon, I will be there. So please, if you see me, come reach out. Happy to have a talk with you. My plan is very simple. We have bought a whole team that is Rust experts and blockchain experts, and we're gonna make a full deployment of Abracadabra on Solana. That's my plan. I'm building on Solana from scratch.
Beautiful. Yeah, we saw that you hired 2 Rust devs recently. So
Five.
Ooh, okay.
I don't want it in a year and a half. I want it yesterday, sir.
Yeah, absolutely. I hear they're hard to find, so good on you. We've got Captain Solana next. That's suitable. What do you got?
Hi, Daniele.
Ciao.
Hello, sir. Daniel, I heard you talk a little bit about plans for Wonderland. So, trying to understand what Olympus Pro has done. They have found a way after their initial bootstrapping. They found a way to flip the model for other protocols instead of renting, but rather buying the liquidity providers. For time, I know we're not trying to compete with Olympus, but I did not really follow on your comment on ability to spin up DAOs. What are we exactly outsourcing? How do you envision that roadmap?
Olympus Pro is an OTC glorified tool. That's nothing else. Like, it's nothing really insanely special, to be honest. It's cool, it's open, it's there, it's dynamic, it's fine. People can use it, but you're effectively selling tokens in exchange of liquidity. Like, it's probably like, I mean, you would do the same with any other venture capital or whatever. Like, there is nothing, like, it's just that, that. And the launchpad that they were talking about, that they said, you copy the launchpad, man, yeah. Like, all that fucking crap is a thing that they want to basically invest into projects and give them on. So it has nothing to do with what I said, but I'm a copycat, I wouldn't be surprised that I mean, a part of the drama that is useless, because it's really useless. How it works is, are you familiar with Miso?
Not very much.
So Sushi Miso is a platform that allows you to launch a token very easily and decide how you want to, like, do the token offering and the ICO or whatever. It's very simple. Like, you deploy the contracts from a UI. It's like a wizard kind of situation in which helps you to launch your token, right?
Got it.
You can imagine the same with Powerful, but instead of launching any token, you launch an Olympus fork.
Got it. Okay.
A full Olympus fork.
Wow. Okay.
Basically recreating what Wonderland has done in the last few months by, growing from $0 to $220 million. I mean, not to say that every DAO will have the same success, but you're basically giving people a plug and play option to try to do that.
Yeah, not everybody needs 250 million for doing stuff. I mean, like, some people will want maybe 10 or 5 or there is goals.
Some of the biggest gaming plays that have launched this month have launched on $2, $4, and $6 million raises. So, I mean, it doesn't take much to get off the ground.
Now it hit me really clear. Thank you so much. Makes a lot of sense. Thank you, sir.
Absolutely. Thank you. Let's get OX Bumsy up here for a question. What do you got?
Hey, nice to meet you, Daniele and the crew. I'm Bumsy, #OccupyDeFi. Let's go. So I've got some questions around Popsicle. I'll just kind of list them out and let me know if you need to hear them again. So the first one was about the cross-chain swaps that you talked about today on Twitter. Being able to purchase, let's say, FTM or Phantom on AVAX. Just curious how that might work. The second question is about the N-Ice cauldrons on Abracadabra. How much are you trying to provide for that? And then some example APYs of Popsicle would be great.
Yeah, let's go. So this is huge alpha. So think it this way. As Magic Internet Money is the only cross-chain liquid stable coin that is everywhere and is completely free to move, the idea here is fairly simple. It's basically creating almost like an OTC desk for all DEXs that has pools of capital across all chains that we support that allow you to execute basically trades cross-chain. So you have a pool of meme on each chain, which you can deposit. This pool of meme will earn yield for executing these trades in your behalf. And you can execute a trade, for example, FTM AVAX. You can swap some FTX for AVAX. How does that work? It basically sends the FTM to the pool. The pool sells it for meme. And on the other side of the chain, the meme go buy the AVAX. Because we have the liquidity on all the chains versus meme, this executes almost like an atomic swap, but it does it in a completely innovative way in which the guys that actually deposit the magic internet money for allowing for these swaps to happen earn a commission, a small commission out of providing this liquidity that is distributed across all those different pools. So it's a super smart way to lock more memes so they are out of the supply. Two, a very smart way to execute any type of trade across all chains. How many times have you been like, this came out as my idea because of Moonriver. Like, I wanted to be on Moonriver, but then it's fucking pain in the ass to buy Mover. So if I bridge, then I get stuck on Moonriver because I can't do anything and the faucets were not working. And I'm like, oh, come on, this is not normal. I need to do something here. I need to be able to buy Moonriver, Mover from Ethereum or from Avalanche or from wherever I want and send it to my wallet, and then I can bridge or do other stuff, right? So this basically becomes an aggregator of all liquidity, of all DEXs on all chains that enables you to execute all sorts of trades with even different paths. You could basically, like, for example, imagine the arbitrage opportunities with this. Like, imagine what this opens up. Like, imagine if you could buy Ethereum from Ethereum on Avalanche. Like, like it's very interesting. Like, it's weird, but I know it's a weird example, but it's a fucking interesting use case. So this is what this is what I meant. I wanted to say in this tweet.
Okay, great. So like the staker.
You see, well, it dropped, but basically you single-sided meme on any chain. The meme gets distributed across all the liquidity across all different chains based on availability. And then one can execute a trade cross-chain. That's it. Simple solution for a big problem.
Excellent. I think there was a moderation in play there as we want to get as many questions as we can going and respecting Daniele's time as well. Appreciate the question, Bumsy. Now, the last bit he asked, I'm curious as well, is about example APYs on ICE. Can you share those yet, or are they private still? Or?
Yeah. APY or APR?
I don't know. What's the difference? Don't even go there. Well, whatever APY, statistic you base performance on.
Yeah, like I was looking at like a 1 billion APY on Spell ETH. It was just fucking ridiculous. Like, it was literally ridiculous. But let's say that we are talking about 65 to 85% on ETH stable, which is great, and more than 300 to 500% APY to like ICE and Spell pairs and others like Shiba, like, which is fantastic. I can't wait to be LPing Shiba again.
I just wanted to, to butt in really quick here, even though I said I wasn't going to talk. The implications of providing, an APR like that, and this is without like incentives, right? This isn't
Zero.
Got an LP and I'm staking in a farm. Like, incentives aren't sustainable. Everybody knows that. Like, we're talking about, being able to, achieve a sustainable APR here. Without those incentives. And I think that is one of the things that pushes DeFi forward. This incentives game, it doesn't last forever, right?
Agreed. Like, and additionally, to be able to provide higher APR in the moment in which the market doesn't trade that much, leverage is key. That's why Abracadabra is such a critical component of the future of DeFi, because it provides leverage on those specific LPs, for example, Popsicle LPs, and augments your opportunity, of course, taking slightly more risk.
Absolutely. We've got Indivisibility up with a raised hand. What do you got?
Hi, thanks for taking my question. Daniel, I just wanted to ask you, I wanted to preface this by saying thank you for everything you do, #OccupyDeFi. I just wanted to ask, is there any predictability in terms of the MIM replenishments, specifically the wrapped memo?
Yeah. Like as we might be transitioning from memo to just time as the asset, we decided that if we do another replenish, we're going to do a last replenish, and then we're going to open a new one with much, much better condition for an asset that is not deprecating, like that is actually in limited supply, which is a complete different game, right? So we have expectation that the asset goes up rather than the amount of time goes up, right? So it's not the market cap supply play anymore, it's an actual asset directional play. So with all the liquidity that is owned, then you can expect to have quite a lot of availability on the normal time.
So for those of us who were just about to, let's say, maybe either purchase or stake wrapped memo, should we hold off on that until you make that change?
No, I don't think so, because you still get the rebases.
Yeah. Okay. All right. Thank you very much.
So
Appreciate
actually, you should think that the time that you're getting is more valuable than it's supposed to be.
Okay. Perfect.
Right?
Yeah, going from hyperinflationary to scarce. Let's go.
Exactly.
Powell Clayton, you're next.
Appreciate it. Let me give these flowers out. Messi, RT, Daniel. I mean, you don't know what you've done for the Frog Nation. My question is real quick. I know we just voted for cauldrons to be deployed onto Binance Smart Chain. If you can do any kind of elaboration on that, that'd be greatly appreciated.
Yeah.
Awesome.
Yeah. Okay. Thank you for muting. So, there is not so many like interest-bearing asset on BSC, but there are LPs. And with DGenBox, we are deploying the JLP strategy. That means that you can use your LP or a Joe LP as collateral, and then with DGenBox, we send it to the farm, so you can still get the Avalanche Rush, etc., and all the rewards. The same applies with the same code base to Pancake. So you will be able to, for example, provide BNB, BUSD, and you will be able to leverage it. You will be able to still farm leverage with it. It's fucking insane. So that's pretty much what is my expectation. I expect to make a lot of money on BSC.
Well, what about Spell in regards with Pancake? Is there any kind of collaborations possible or alpha you can give us, or am I dreaming?
I mean, I just told you that we add them to leverage all their LPs, so I guess that's, yeah.
Yeah, that's that.
I don't need the cool thing about all of this, that I don't need their permission to do any of this. I just capture their money. That's it. That's how I like to do business. I don't need permission. I just take what is there to be taken.
Yeah, you open up an opportunity for the LP token holders to make their own decisions, right?
Exactly.
And guys, as much as we want to have everybody up here, we do have to cut this off at some point. So if you are up here as a speaker, you will have the opportunity to ask a question. I would remind you, please keep that to one question, be respectful of everyone's time. But unfortunately, we still got 3,500 people in here, and I'm sure we could go on for hours and hours and hours, but we are going to get through these remaining questions, and then we will wrap this up. So thank you.
Yeah, if you don't get your questions in today, guys, be sure to, you'll hear from Danny again. We'll be finding ways to host him and let his voice be heard and give you guys access. I'm sure he's made that abundantly clear that he's open to it. So don't sweat it either way. Rebased God, you're next up.
Hey guys, I just wanted to first start off with an immense amount of gratitude for Danny and RT and Messi and a lot of the people in the audience as well who have helped me as I've gotten into DeFi. I'm going to keep my question pretty short here. I'm a big fan of the convex pools on Abra on mainnet. I know Convex has some timidity about expanding to L2s. I know that Curve is a little bit timid about competitive L2s given ZK Sync upcoming. Just wanted to kind of get your thoughts, Danny, on more convex pools, more Curve interaction on other layers, and what you kind of see as the future of the Curve convex sort of duopoly in mainnet on other chains. Thank you so much.
Well, First of all, I think that the number one driver of TVL recently on Curve was deploying on other chains and Abracadabra, because we have added more than 2.5 billion on TVL there, which accounts at 25% of their total TVL or something like that, across all chains. So almost even more, like probably 3+ billion. So how I see it is that, I mean, I'm here to work, and I can only do as much as they deploy, right? So I'm dependent on their decisions on doing so. I push Convex to do the deployments on other layers, but as gauges are not clear how they will work on other layer ones and boost and all of that. At the moment, it's just a game of using like DGenBox and leveraging also other chains that way. We can't do much more than that, right? I wish I could see the future. I know that they want to, but from there to execution, I mean, my expectation is always the least profitable outcome. So I try to prepare for that. Right.
Thank you so much, man. Really appreciate it.
Welcome.
Crypto Jizen.
Oh, finally. Ciao Daniele, spero tutto bene. So I had a question that the guy before already asked about cake, so I will go with the second one. We will see NFT based on the same model of cons. So you stake the NFT and you get you farm a token like, I don't know, spell or a second type of another type of token, because I know that you believe a lot in NFT. And second, very short question: will it be possible to stake spell on Phantom chain on Abracadabra? Thanks, grazie.
Yeah, we respond to the second one. If you can mute yourself, okay.
Got him.
So, we are bridging S-Spell, so we're going to create pools that are S-Spell, so people can buy S-Spell also on other chains. That means that, yes, effectively you are staking at the moment in which you have it in your wallet. So about NFTs, I mean, I feel like we have so much treasury right now that we need to kind of stop a second on Wonderland and take a deep breath. Take a look at what is sustainable and take the best decision for making sure that nobody that holds time lose any money, only makes money. That is the first thing that I want to do. That's why we want to transition to the DAO model. And that was the original intent from the beginning. It's just that I'm a sneaky bastard. And I like to experiment with this kind of stuff. So now that we have so much value there that we can start utilizing, we need to do the voting. And as the voting progresses, we understand what is going to be the future of the DAO based on people coming together and deciding what we are going to do. So are we going to follow up with the NFTs that I wanted to make and the RPG that we are doing and so on? And additionally invest in the ecosystem, maybe do the acquisition of a game. Like we can do really crazy stuff right now with the money that we have, right? Like it's fucking insane, right? So we could buy whole game studios. Like, I mean, you need to kind of open your mind on how many things we can actually do.
Yeah, it's incredible in the real world what you can do with $100 million, let alone 220.
Yeah, exactly.
Like you're teasing at the idea of buying a game studio. It sounds ridiculous, but it's really, there's probably a whole bunch out there for a price tag you could afford with the DAO treasury. MJP Soul, what do you got?
Hey, everybody. Thanks for giving me the opportunity to ask a question. Hi to Danny. Just want to say thanks for everything you do. I think you show genuine thought leadership in the space, and you also have created a movement of frogs, which is going to be very powerful. So the question I was going to ask was about Solana, which has already been asked. I'll be in Lisbon next week, so maybe we can meet up. So my second question is about your relationship with Yearn and the kickback mechanism and how that flows into Spell, and if there's any other yearn-like places on your radar? Like, what does it take for you to go and put assets somewhere? Like, is there anybody else that you're considering putting assets with?
Yeah. So
thank you.
So their model is based on how much TVL we provide. So we are at the highest possible. Well, we are the highest contributor of TVL of year by far. So we have the highest revenue share. Everything is transparent and it's in their GitHub. We have been paid recently something like $800,000 for the month of September or something like that. So it's right now is they're sitting into the multi-sign, and I would like to vote what to do, because also could be the opportunity. I wanted to redirect some of those extra yield. For example, I wanted to vote if it can be redirected to the pond, a percentage of that. Others have said like they want to buy convex, and things like that. But by principle, it should be in the Merlin candles, right?
Yes.
Like that's the standard right now. A percentage, like right now we are giving 100% of the revenues to the SPL, which I think is suboptimal, even though we're doing it because it's correct, as long as we vote to decide how much. We have expenses that I've been paying myself, right? Like all the months that all the spell that I have sold in the early beginning, it was maybe 20 or 40K worth, because I was really trying to not drain completely my money. But I've been paying all this stuff myself because we didn't raise any money from it, right? So it would be nice. It would be nice to utilize, for example, part of the revenues to create like a structure that is self-sustaining, right? Like a normal company, and then distribute revenue versus expenses and things like that. So I'm really looking into it. For now, we have enough. Spell has appreciated so much that we have so much spells unallocated on the team side that we are using now finally to pay the new developers that we are onboarding. So we have onboarded 3 developers just specifically on Abracadabra, and one has been working this month and has been really helpful to Merlin, and the others are going to start this month. So you can expect that if you thought that I was a shipper, the shipper goes 3x. So we're going to really start pushing very hard. Plus the additional team that is working on the Rust implementation, with the consideration of deploying on Solana, for going away from all this EVM first kind of concept. I think it's not unifying, and it's not looking into the future. I really want to expand into any chain. Like anywhere there is opportunity, we should take it. And that's how a company should behave. Like that's how a DAO should behave. It's not a non-profit. Like we are not a non-profit organization. We are a for-profit organization. So that, and many investors have told me like, Daniele, I bought your token because I know that you are profit-oriented person. Like you capture, you have no fear of capturing value where you see it, right? And that's kind of like my mentality, Like if I see that we can make money, we're gonna take it. There's no way that we're gonna leave it there. Like it doesn't make any sense. Like we are not here for putting solar panels into our offices, sir.
Great. Thank you. Thank you very much for your time. Take care.
Great question. I appreciate that. And real quick, you mentioned building up Abracadabra on Solana sort of from the ground up. Would that involve like a wrapped spell, or do you envision that being?
So the announcement today is that we have been starting collaborating with REN project, and with the REN project, Magic Internet Money is coming already to Solana, and it will start on Saber to trade against UST, because I keep my orientation into building liquidity against UST, and we can in the future maybe do liquidity mining on something else. We are also bringing Spell to Solana, so I think that is very interesting, and we are gonna put an allocation of distribution to build that liquidity up on Solana. So you can expect us to start this way. The wrap token and everything will stay the same way. So the cauldron will be topped up. So it's going to be the same seamless experience that we have in this moment, in which you can swap the token. You can move then from Solana to Terra, from Terra to Cosmos, and so on. So we retain this cross-chain mentality, and we build up into the future of just consolidating our leadership in being the number one cross-chain stablecoin in the world.
Love it. And last but not least, we got old Brad Mills. Come on down. What do you got, sir?
Hello, thanks for taking my question, sirs. I just threw up a tweet in the Nest. If anybody hasn't seen that yet, it's a really good thing to read through. Ross Ulbricht wrote this from prison last summer. It's his take on MakerDAO, how you could redo it a different way on Bitcoin, or really on any chain, but on Bitcoin. So that's why what I wanted to come up and ask you, Danny. You talked about how Popsicle could help bridge across chains natively without having to do like a traditional type of bridging. Do you think that, I mean, what needs to happen before Liquid Network and Lightning Network on Bitcoin are able to benefit from some of these things, where people are able to move their collateral from chains like Ether and whatever over to Bitcoin chains?
So this is great that we talk about this. Thank you. Like we always talk about all other chains apart of the leader of the chains, the boss, the ultimate boss, right? If we look at the whole thing as a game, we are kind of like taking one boss at a time, right? Now we are getting to larger bosses like Solana, for example, which is a hard one, right? But Bitcoin is the ultimate, like it's the price. And for starting this, I've started in my mind this idea of what the hell are we gonna do with all this treasury that we have, that is building up as the mission. We are reducing the mission a lot because we can't just dilute people just to fuck out of. Doesn't make any sense, and we shouldn't incentivize liquidity that we don't need because it's like a marketing thing. So my idea here is step one is that we should be able to create a sort of like a catalyst sale for the treasury of Abracadabra. The catalyst sale should be directed exclusively to the Lightning Network. So how this would work, I'm really looking into solution for this, and I've been talking also to Paolo, for example, and I want to reach out to the Liquid team and the guys from Lightning, because I want to see if, for example, with Ren, we can do sort of like the idea that I had to do the bonds directly from Bitcoin. So you basically use the Ren bridge plus zero confirmation from Badger, and it goes into the bond, and it purchases the OTC deal directly from the Bitcoin chain. But as Bitcoin is very expensive, plus Ethereum that is crazy expensive, the whole thing, I don't know, I don't like it. I would like to use like a more recent technology like Lightning. So I'm looking into a way to integrate Lightning into this kind of permanent bond sale, which would basically create a catalyst sale over the course of 1 year, building up a Bitcoin, the largest Bitcoin position of any decentralized autonomous organization out there, because I really truly believe in we should have a lot of Bitcoins. Like if we need to survive, right? And at the same time, this would help us not only engage with the Bitcoin community, but start experimenting on what we can do on Bitcoin, right? So it opens up the idea of saying, hello, sirs, like we are here. We are very looking forward to build on top of Bitcoin or Lightning or Liquid or whatever. And that the fact that we are a sink for Bitcoins is very important. And at the same time, we really truly want to to engage with this conversation now, because it's going to be a long journey, but it's really the ultimate boss, sir. I think you agree with me, right?
Danny, do you know how long it's going to be before Omnibolt is ready to put stablecoins on Lightning Network? Do you have any insight into that?
Unfortunately not, but I really wish it were soon. You know, it's
Excellent.
Yeah, it's just so fantastic. Like the whole idea of having the opportunity to collateralize magic internet money natively on Bitcoin, dude. Like, come on. Like, we are not even talking about DeFi anymore. It's just a whole other level.
Isn't Taproot supposed to be something that's coming up in the next few weeks that is like smart contracts on Bitcoin?
We will see. Like, we have like we have seen all sorts of things. I'm just waiting to see what really will work out, right?
Yeah, I mean, I read like an article about it, not like the dev docs or anything, but my take was that it's smart contracts on Bitcoin coming Taproot November 11th, but that was 6 months ago.
Taproot is coming soon. It enables more privacy because you can have more multi-sig transactions, like a Lightning Network channel opens and closes, kind of be cloaked so that they just look like any other transaction. It also enables discrete log contracts and stuff like that. But to the level of like what you guys are talking about with Ethereum and Solana and all that type of DeFi stuff, it's not there. And I don't think that's the use case that most Bitcoiners are building for anyways. But the idea of having a collateralized stablecoin algorithmically backed by Bitcoin trade on top of Bitcoin via Liquid and Lightning Network is such a compelling idea that it's going to happen eventually. Like Magic Internet Money, the stablecoin, if there was a version of that was 100% backed by BTC natively riding on Bitcoin, that was interoperable between different chains for people who wanted to go use it on other chains, I think that would be pretty cool. But again, there's like some stuff that still needs to get built for that.
So slightly less smart contracts coming to Bitcoin soon. Messiah, how you doing over there?
Yeah. So, wow. I just wanted to thank everybody. We had about 4,000 live listeners at peak. It means the world to me and, the whole team over here at Frog Radio that you guys would show up and support us like that. Of course, Danny, thank you so much for being here, for being, I loved how, I forget who it was, but somebody, put it forward that you were a true thought leader in this space. And I agree with that wholeheartedly. I mean, you really are inspiring a lot of people, empowering frogs and really just kind of giving hope, to people in this community. And this is a community I've been a part of for a very long time. So, seeing you do that really does mean a lot to me. Now, just to close out, I wanted to remind everybody that, Ethereum gas has been fucking crazy recently. You don't have to be paying that kind of gas. Literally in 10 minutes, you can be over on Avalanche and you can be using that chain. The transactions are less than 10 cents. They literally give you gas when you bridge over. So everybody make sure to get on over there and check it out, especially those guys with those smaller portfolios. Tons of DeFi offerings. We talked about their new not incentives, but kind of a growth fund earlier. It's over $200 million. So you can expect a lot of interesting things popping up there soon. Other than that, guys, thank you so much for being here. Keep your eyes posted on our Twitter because we are going to be announcing our next guest momentarily with his amazingly frogified image. And you'll find out who that is very shortly, but I'm sure you're going to be very, very excited about that. Also, if you only were able to catch the tail end of this, keep your eyes posted on our Twitter because we are going to be having this uploaded to YouTube in the next few hours, I've been told. Now, it will be coming to Spotify and iTunes, but those things do take a little bit longer. RT, you got anything else, man?
No, that's it. It's a wrap for today. Absolutely, loved having you on here again, Danny, and getting to chat and pick your brain. And hope to have you back soon.
Thank you very much for hosting me. This has been great. And I guess that we have so much stuff to talk about, that unfortunately time-wise is what it is. But I'm looking forward to maybe come back with just one team, like one of the projects that we pick. I think Wonderland would be the best one because I haven't been talking about it much. So
yeah, I feel like I could
time.
go for another hour or two with you here without even running out of things to talk about. But there's a magic rule in show business. Always quit while you're ahead, and while everyone's still having fun, and the game stays exciting for next time. So we do look forward to that next chat, and I will be in Lisbon with you. I'm arriving on Saturday, so I really look forward to meeting you in the flesh.
Me too.
Anybody here listening, if you guys want to come and see us, I'm sure I'll be front and center around the Solana conference most of the 4 days. So look forward to seeing you guys there.
Keep your eyes peeled for the tall, good-looking Canadian dude that's wearing the syrup-scented cologne. That will be RT.
Yeah. Front and center is in like standing near the back, chatting with people. But yeah, I'll be there. So I hope to see you guys there. And until next time, stay froggy.